This is an update on Litecoin, which is in a bit of a breather at the moment. We've had quite a tear upwards ever since we hit our secondary low on March 7th. But March has been nothing but lots of fun and rainbows. However, April is starting off with a bit of a pullback here. However, I don't see this as anything but a healthy correction on our way up. This is our 30-minute linear chart in Litecoin, and we have what I'm calling the first wave back here in orange, second wave, which was pretty deep, and we have hit basically the exact Fibonacci target range we need to hit for this to be a third wave, and we've pulled back, and we actually held support for a fourth wave down, so I don't expect us to go down any further than this. This looks like a complete fourth wave with even an A, three-wave B, and possibly a five-wave impulse to finish off the C wave. And therefore, I would expect us to start up our fifth wave up somewhere between $139 and $145. And when we look at this thing more closely, we might already have the subwave one of that in place. This could be a 1-2. And when we look at this, there is confluence. If this is a 1-2, nested 1-2, then the top of that impulse does land somewhere between $140 and about $142. So there's confluence there. Pretty high confidence target for the next several days or so, maybe the next few weeks, which shifts us over to our long-term chart. This is the logarithmic chart in Litecoin, and I have seriously decluttered this. There's a lot going on in the last update, so now things should be much easier to follow than before. I actually do have three patterns here, and our primary pattern used to be green. I've actually switched these around. I've added another primary pattern with the green being relegated to our secondary, essentially. And this is available in the description below, so be sure to check out the link if you are interested. But I'll get the red pattern out of the way first. It's the simplest, very clear parameters. If we break 91.55, we're very likely going to visit this box somewhere between 76 and possibly as low as 32.82, something like that. I don't see this as a strong possibility right now, especially with the recent rallying, but that is the low that we hit, I believe, on February 24th. Yeah, so 91.55 is our line in the sand. If that breaks, purple and green are immediately invalidated. Now, it doesn't mean we're going to have a deep retrace, but very likely we're going to go in that box. That being said, we have a lot of MACD MACD divergences in place, and this is actually on the week view. So I'm going to zoom in a little bit more, give us a bit more of a clear picture. And this was demonstrated last time. You can see how we got less and less stretched as the prices got lower. And now we have ourselves a pretty good setup. Yes, it looks like a complete pullback. We hit just past the 0.764 extension of this A wave. So this is where we are. Our green pattern is calling for a more impulsive rally, and we look more into the past of Litecoin, starting back here. If we look at this entire thing as a 1-2 structure, this pattern would actually call for this secondary bottom in March 2020 as having been the actual bottom, the C wave. It's not the prettiest thing because it's the higher high here, but I could call that a truncated C wave. I've had similar interpretations in Bitcoin and Ethereum and several other cryptos. If that is the case, this is a nested 1-2 of a smaller degree, and we would expect to have an impulsive rally from this point onwards. These green numerals indicate that we find ourselves somewhere between 26 and 260 and $514 in this box. It would be a five-wave impulse, so you would be looking for that characteristic five-wave structure that looks something like this. I mentioned that we should see ourselves rallying to that 140 range, maybe on this first wave alone. So let's put that right there, and that's about what you'd expect to see if we got a five-wave rally into that box for our wave one. Then we'd expect a relatively deep wave two, and then we'd be off on a rocket launch, because this would be the third wave of a bigger third wave of an even bigger third wave that start back here. So this could go completely parabolic, just kind of like what you see here after the 2020 crash. This was a third wave of a first wave, but you can see how we went vertical. September 2020, we hit a bottom around $42, something like that, and we were up to 140 in a matter of months. Was that 6 months, something like that? So that is what you'd expect to see if we are following green, and eventually green would project quite high up. We'd have several corrective pullbacks. Our green would target somewhere above $4,000. However, this is my secondary pattern for several reasons. I'm going to declutter this real quick, and that is because when we look back here, this is the lower low. This looks like a 1-2. This can easily count as a 1-2 nested setup. So you could call that an impulse or three-wave corrective upward movement, and then you have three waves down. And this pattern here could be interpreted as an impulse, as I have in the green pattern, or as an ABC up pattern, basically a corrective zigzag, A here, B here, C here. If you've been watching my other videos, I have this exact interpretation in a lot of other coins. I believe I went over Dash. It has a very similar setup in which this really looks more like an ABC up. Same with Stellar Lumens and EOS and several others, Bitcoin Cash, Ethereum Classic. Those also have that diagonal as the primary pattern. In Bitcoin and Ethereum, I actually expect our fifth wave, the final fifth wave that we have, to take the form of a 5-wave diagonal pattern. It fits the Fibonacci confluence much better. So if we have a diagonal, this would be the third wave top, and it actually hit the expected target zone that you'd expect to hit in either a diagonal or an impulse. So if this is a 1, 2, and a 3, typically you'll project between 1.0 and the 1.236 extensions. We did break through that, so that gives green a bit more credibility, but because of the shape and the nature of all this, I think that gives us more of a clue that this might be an ending diagonal situation or leading diagonal in this case. And we've had a very deep retrace, and therefore our fifth wave up would take a 3-wave form. And I know academically speaking, you don't have your diagonals project beyond 715, but because we went so high here in our third wave, there's a chance we do get above $1,000 there. So I'm not going to rule it out, but just to go with standard Fibonacci targets, I'm going to leave 715 as the top if we are following a diagonal. So that's about where we expect. However, blow-offs are not unheard of in Litecoin, so we could see a bit more. The difference between an impulse and a diagonal is that a diagonal, your subwaves take the form of 3-wave zigzags, and they don't generally project as high. And there's usually a sharp reversal in direction. So we could see a cliff dive after that if this is really a diagonal. So at least in the near term, next several months, there won't be very much difference between either green or purple. I would expect us to rally into this box to at least get the rally started, and you'd expect a healthy corrective pullback in the wave 2. And based on the precedents we have back here, maybe a 38 to 50% retrace is what you'd expect here. And then you jump into this box in our final leg of the rally. If it is the final leg, either way, we'd have an impulsive form to this rally. And if we blast right through that box all the way up past 1,000, etc., that would be a very good indication that we're actually following green. So unlike some of the other points, you have a very clear, very clear distinguishing behavior if we are going green, because again, you would blast right through this purple box if we are going green. So exciting times ahead. I'll have plenty more updates on not just Litecoin, but many of the other cryptos. And I advise in every video, if you like altcoins, don't just like one, like a bunch, have 5, 6, 7, or 8. Because you never know which one's going to outperform and which one could just go kaput. So you don't want to get caught with everything in one coin. It could be a very high risk proposition without any of the upside targets that you can take advantage of. If you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.